Welcome to Money Talks. I'm Genevieve Westcott with your inside oil on the rural economy as it affects you in the ag sector. In this edition, while most New Zealanders have been soaking up the summer sunshine, global commodity prices continue to rocket from strength to strength. How long will the golden weather last? What's the prediction for our currency? Are we headed to hit that magical 80 number? And farmers around New Zealand are celebrating the high lamb price thanks to a supply shortage and strong beef markets with U.S. prices at record highs. Is there any end in sight? All this and much, much more coming up. But we're off and running in 2011. Joining us now is ASB rural economist James Shortall. James, what kind of a year is it shaping up to be for the country cousins?
Well, I think it's going to be an interesting one because we are seeing really strong commodity prices, and that's going to be good for revenues. But then, of course, we're also starting to see some good demand for some of those input costs like fertiliser. Oil, of course, is at very strong prices at the moment. So that could tighten some of the margins. Now
let's go across the oceans to the great US of A. Apparently things are going pretty well there. What's the latest in terms of shares?
Equity markets in the US have been doing really well over the past week or so. In fact, the Dow Jones has increased each of the last 7 days. It's run right through the 12,000 mark, which is a level, putting that into context, it's a level we haven't seen for 2.5 years. So, equities have been doing well, and corporates are showing really good earnings at the moment.
And how much is the current Egypt situation, of course, playing into this? Tensions appear to be easing, but now I see that there's a general strike going on there even as we sit here.
Well, generally, equities don't like sort of turmoil and uncertainty, and the Egypt situation is creating some uncertainty. So, we have seen, a bit of fluctuation, but with things seeming to settle down, then markets are now sort of focusing their attention more on corporate earnings and some of the underlying fundamentals from the US market, which have started to look a little bit better. I mean, there's still a long time to go yet before we're really out of this, but there's some good underlying fundamentals there.
And listen, apparently a heck of a lot of takeovers going on. Something like $16 billion worth in a single day. What's going on?
Yeah, well, that's coming through some of the major takeovers in the healthcare sector. Of course, there's been some changes in the US healthcare sector over the past sort of 12 months, or proposed changes. So, and there's also been some further announcements over the past 24 hours. So, plenty of activity there, and generally that's seen as being good news and positive for equities.
How are companies in the US generally doing? Pretty well?
Yeah, we're into the
fourth quarter.
Yeah,
yep.
of the earnings season. So companies are releasing their earnings results, and about 2/3 of those have been market expectations. So companies are actually doing really well. They're providing some pretty good cash flow, and this is probably another fundamental for the US market.
And surprise, surprise, the jobless rate is way down. What's going on there?
Yeah, it's a little bit confusing because the US jobless rate has decreased the last 2 months, so it's down to 9%. Still very, very high level, so that's going to be a problem for the US economy. But it has been flushed over a little bit because, of course, fewer people are probably looking for jobs. There's more people that have been looking for jobs for quite a while now and just can't find any.
They were all at the Super Bowl eating all those snacks.
Probably were. I mean, that would be a good thing. Hopefully, they were spending lots of money. But I think the US is still going to be hamstrung by people that are unemployed and people not spending money.
And how's that going to affect the US dollar, and then how's it going to affect us with the ripple effect?
Yeah, well, actually the US dollar was in favour for a little bit, but New Zealand dollar still sticking, I think on Wednesday morning we've been trading at the late 77 cents against the US, and we're still predicting that we're going to remain fairly sticky against the US over the next few months. But our economic outlook's starting to look a little bit more uncertain, and the US outlook is starting to, relatively speaking, is looking slightly better. So those two things will potentially mean that we'll slowly drift low against the US, but not expecting to see any big drops anytime soon.
Any relief in sight for interest rates here? What do you think is going to happen?
Well, interest rates, the Reserve Bank left the official cash rate at 3%.
3%, still sitting there?
That's right, and with things going as they are, then it doesn't look like there's going to be any need to increase interest rates or the official cash rate anytime soon. We're actually picking that it's going to happen towards the end of the third quarter of this year, meaning that interest rates should stay low for a good period through 2011.
sadly, unlike the Yanks, our jobless rate is going up, 6.8%. That's not good.
Yeah, I mean, we have seen a lot of volatility in our jobless rate over the past couple of quarters, and up to 6.8%. But probably on when we even out some of those big fluctuations, and we're not looking quite as bad as what we were before. But putting that into context too, 6.8% against 9% in the US, and that's some of the differences in the economies.
Yeah. Now, commodity prices still incredibly strong around the world. What are the ones to watch?
Well, I mean, if we talk about oil, for instance, then
over 100 US a barrel.
Right,
that's unbelievable.
So that hurts the pockets of US consumers, and also for us here in New Zealand. So we're picking that oil prices going to stay strong, but commodity prices in general, I mean, it's all about supply at the moment, and the fact that we've seen some storms ripping through the Australian areas and through Queensland, and that's going to have some impacts on supply, and it's going to have impacts on beef, on lamb, on wool, all of those factors.
I'd like to be producing lamb at the moment. They're doing incredibly well.
That's right. I mean, prices looking strong, well over $6. That's incredible, and a lot of the other commodity prices also looking good.
And beef prices storming ahead too.
Yeah, beef prices out of the US market, they hit an all-time high in the new year. So the demand in the US is looking pretty good. Overnight, then McDonald's released their latest retail sales figures, which suggests there's still good demand for beef out of the US market. Our outlook for beef is looking pretty good at the moment.
So, not so bad.
Not too bad at all. Not too bad.
All right. Okay, James, stay with us. We'll come back in part 2. Thanks, James. Coming up after the break, we drill down into those European debt issues with Spicer's senior financial man, Jeff Matthews. John Key finally admits we hit double-dip recession. And now, with an election in the air, he's singing the song of fiscal prudence. Has his government done enough to bring us back from the economic brink? Is it really all the fault of the GFC? But first, answer this in our Farmers' Facts and Figures quiz. On average, how many more years do rural dwellers live compared to city slickers? The answer when we come back. Stay tuned. Welcome back to Money Talks. Just before the break, we asked you, on average, how many more years do rural dwellers live compared to city slickers? The answer, rural dwellers live on average 8 years longer than city folk. I'm moving to the country. I don't know about you guys. Joining us now is Spicer's senior financial advisor, Jeff Matthews. And John Key's announced that he's going to the polls in November. No big surprises there. Is it going to be all about the economy, Jeff?
Yes. Simple answer. And if we win the Rugby World Cup.
That would be nice, wouldn't it? He'd be going on a high there.
Exactly.
How's the economy looking from your point of view? We're still pretty soft and stuttering along.
Well, James, said before, I mean, the farming sector's in a great space at the moment as far as commodities. So that's a positive. But yeah, the economy is stuttering along. You're not getting the kind of normal rebound that you would after a recession, and that's what we talked about late last year. This is not a normal kind of recovery.
And what seems to be happening in the economy, gentlemen, is that the gap between the rich and the poor, if you like, is widening. Don Brash came up with some clever ideas about how we could deal to that, but John Key's not doing it. Is he going to have to deal to that?
Part of what came out of Phil Goff yesterday is the government should be creating more jobs. Governments actually don't create jobs. What they have to do is create the right environment for James or somebody else to go and start a business. That's what creates jobs. There isn't much of a difference between paying somebody on the dole or paying someone to be a public servant. It still comes out of taxpayer money. They're not actually generating new jobs. They're not generating export dollars. That's what has to happen.
James, if anything, it sounds like he's going to be going now, taking after his own public servants and putting a lot of them on the bread line. Is that a gamble that they're going to be able to go out and create more wealth?
Well, I mean, I think it's what we're seeing around the world and what we've been seeing for 12 months now is all governments trying to cut costs and trying to facilitate growth, but it's a fine edge between trying to do these two things. And the government can't go out and spend too much money. They've got credit rating agencies that are looking at them with a fine-tooth comb. We're borrowing a lot of money at the moment, but really they've got to trying to find some policies that are going to provide economic growth on a long-term sustainable basis, but also get through these short-term problems.
You know, John Key's blamed a lot, of course, on the global financial crisis. Is that completely fair, Jeff?
A fair chunk of it is, but again, without wanting to sound political, some of the problems we've got now are when we had the good times in the mid 2000s, Labor spent a whole lot of money because all this money was coming in. We've seen a huge expansion in payments to health, education. We've seen a big increase in public servants, which was fine when we had budget surpluses. We're not in that kind of position now. We can't afford some of those things that were introduced 5 years ago. So,
and let's be honest, we only have to look at Europe. The situation there continues to be pretty diabolical. Spain now is the one everybody's worried about. What's happening there, James?
Well, I think the biggest concern about Spain is that it's so big, and the combined GDP of Spain is bigger than Ireland, bigger than Greece, bigger than Belgium, bigger than Portugal. All these countries combined. So if you just have that one country go over the edge, and you've got a big problem on your hands. And I don't know whether the EU could really deal with that. They can deal with the likes of Greece, like Ireland, those sorts of places, but they've got some pretty big issues there to work through, and it's going to take some time to do that. And there's not an easy answer.
Yeah, well, there's no easy fix. I mean, that's the simple answer. I mean, even if Greece had defaulted on their bonds last year, the biggest losers would have been French and German banks. So the European central banks said, well, hang on, we don't want to annihilate French and German banks. Let's put together a package that kind of looks like we're bailing these people, at least backstopping them. And the same thing's happened in Ireland. I mean, banks in Europe and other places had about €500 billion exposure to Ireland, 500 billion euro. So if the Irish had said, well, we're just going to default on our loans, all those banks in Europe would have been suddenly, recovering, would have been knocked back again.
Yeah. And of course, as you say, I mean, Spain is huge. What, 10% of the GDP of the Eurozone? That is massive. Is there enough money over there to bail them out if that's what needs to happen?
Well, it depends on the severity of how much they default, but I suspect that that's would put some serious strains on the bailout packages that have already been announced. Whether or not those countries would have the ability to raise more money or to provide the guarantees in place, I would suspect that probably not. That would be a bit of a disaster for the European Union, and I think all of those underlying factors are going to be a real problem for the EU right through this year, and still going to be an underlying problem for markets, I guess, in general.
Funnily enough, America, we talked earlier, the United States seems to be doing a bit better, Jeff. What's your take on it?
Yeah, they have. I mean, I think James touched on it before, 7 straight quarters of, increasing company profits. What's happened in the last 2 years is company profits have been increasing, but they've been increasing largely because companies have laid off 7.5 million workers and they've cut plants. So they've basically cut overheads, and that's why they've been profitable. What hasn't happened is they haven't had the increase in sales figures, and that started to come through in the last quarter where you're actually getting increasing sales and increasing profit margins. So profit margins look good. Most US companies are awash with cash, and that's why we've seen takeover activity. I mean, we talked about unemployment before. Let me give you a number. About 2 weeks ago, Google advertised for 5,000 new jobs. Guess how many applicants they had for those jobs?
I couldn't begin to imagine.
75,000 people.
75,000
So what
people.
you've got in the States, apart from 9% unemployed, what you've got in there are people who've been unemployed for more than 2 years, and it's becoming hardcore. And so 5,000 jobs at Google, you get 75,000 applicants. That's how bad it is.
Yeah, and I wonder if they begin slashing and burning the public service. It's all very well to say, well, they'll just have to go out and find new jobs and new ways of making money. Realistically, is it going to happen?
There's no easy fix. These imbalances are built up over a 10, 15-year period. They're not going to be fixed in 2 quarters or 2 years. It's going to take, the US has to take its medicine.
The same here in New Zealand.
Exactly.
I mean, we can't expect to. We're talking about we've gone into recession, into a negative quarter of economic growth in the third quarter of last year. We're not quite there in terms of a technical recession at the moment, but it's going to take a long time for us to work our way out of this. And while we may not be technically in recession, it's going to feel like it.
Feels like it, yeah.
It feels like it, yeah. Although you have a very snazzy new tie, sir. I like that hot pink. Yeah.
Fuchsia pink.
I hope you got it for a bargain.
It was actually. It was half price.
Yeah.
I'm a bargain investor.
He's a bargain. Yeah, he knows his stuff. Now listen, across the ditch, it's not good news for us either, because the Australian economy is now actually going to contract, they're suspecting. This is unheard of, isn't it? They've just been going gangbusters.
Well, they've been going pretty well. I mean, there's been sectors that have been going well. I mean, when you consider the commodity exports, like us, that have been going well. But there's other parts of the economy that haven't necessarily been, they've been way outperformed by the exporters of some of those products. So I mean, with you start to get some storms, some issues through Queensland, through Victoria, that sort of thing, and all of a sudden you might have a quarter of negative growth, and that could impact on us here in New Zealand, our biggest trading partner. Very important to us.
They take 40% of our exports. We're going to be tightening our belts there, I suspect.
Take a big chunk of the population too.
Absolutely. Now listen, the banana crops are wiped out across the Tasman apparently. Sugarcane though is the real worry, isn't it? I mean, that's going to have big effects around the world.
Yeah, well, I mean, we've had cocoa that's been in trouble from the Ivory Coast. So there's a whole lot of different commodities that are having troubles around the world. But sugarcane, yeah, Queensland I think produce about a third of the sugar crop out of Australia. 50% of that is expected to be gone. So that's going to have an impact around the world. I've just noticed overnight that Brazil have come out and said that they may have a slightly bigger sugar crop this year, which will help us with some of those supplies. But you know, you have some short-term issues, and it really impacts on the fundamentals of commodity markets, and that is what we're seeing. And
when will consumers actually feel this? How long does it take when something like this happens? You know, does this happen in a week, in a month, in a year?
Well, if they want a banana, it's going to happen pretty fast, I'd say. But you know, the sugar markets, I think some of the other commodities, it might take 6 to 12 months before that really does come through. And you know, you look at some of the Food and Agriculture Organisation of the United Nations, then their indexes, then their food price indexes, then they sort of lag a little bit with what we have been seeing with commodities. Yeah, it's going way up there, spiking, and you know, they say in Egypt that really it all began with the price of a loaf of bread. Yep. Russia had to get rid of its exports because of the drought situation there. It's incredible, isn't it? Yeah, I mean, food more than anything is driving how we act and behave in the world. Yeah, and you look at China, for instance. They've been self-supporting in terms of wheat for quite a few years now. They've got the potential for a drought this year. If they can't get the product they need, they're going to have to start importing. And of course, wheat supplies are very short at the moment. That could have a major effect on prices, and of course the price for breads and things like that. Well, the other thing too, I mean, there's still a fair amount of speculation or trading in commodities. It's not plenty of speculators. Yeah. You see it in oil, you see it in cotton. You Absolutely, see it, and we pay the price at the end of the day. But you know, that's part of a market. Otherwise, you have a kind of an economy like Russia used to be, where you try to control everything. You have a free market, and you'll have people in there who are speculators or traders. I'm just curious, when you guys go shopping, unless you know the little ladies do it, I'm not sure about you two. But when you guys go shopping, do you now are you more aware of the price of food? Do you maybe put something back that normally you'd like to take? Yeah, I'm aware of the price of food, and I'm also aware of where it comes from, how it's made, all those issues. So you know, I think that not only the price, but also some of the other factors that are influencing the markets around the world. And do you think most shoppers are becoming more educated about that? Do you think that there's cut through now about all of these issues? Definitely, I think in some of the major centres, yep. And you know, they're probably you know, in the markets that we want to be playing in and around the world, then they are thinking about those things. So. Yeah, I think it's I grow my own vegetables, so I'm self-sufficient. Oh, you do? What do you grow? Tomatoes, corn, lettuce, beans, peas, beetroots. Fantastic. Well, hey, you notice he didn't bring us any. Next time, Jeff, make sure you come with a goodie bag. But the other thing too, I agree with James, is, you know, I'm less concerned about the price, but you know, where it came from. From a safety point of view? Yeah. I want to know what I'm eating and what's in it. So when you saw that thing the other day about the food countdown, putting gas and stuff in it, and that kind of scares the hell out of me, because I want to know what's in my food. Yeah. I think that's been happening for quite a while, Jeff. Possibly. That's right. You just didn't know about it. Yeah. Sometimes knowledge is not power. Well, sometimes you don't even want to get out of bed in the morning. You could just pull the covers up over your head. Yeah. Okay, now listen, let's talk a little bit more about the rural economy. PGG writes in, another takeover bidder, a mystery bidder, though they say it's that big Canadian company, Agrium. What do you hear? Yeah, well, there's plenty of speculation around that, who it's going to be, and I guess the independent directors have said that the Agria offer looks pretty good, and but to hold off for a little while, just to wait and see if another bid does come in, that might trump them. So you know, that's going to be the advice for the next little while, and it'll be interesting to see how that really unfolds. We've seen plenty of activity for takeovers in the agricultural sector around the world. Of course, last year in New Zealand with a number of companies, and you know, it's happening again.
Well, we're talking about New Zealand food. Just very quickly, bring us up to date on what's happening with dairy prices.
Yeah, well, dairy prices increased again last week at the global dairy trade.
Unbelievable, yeah, just going up and up.
That's right, and I think the positive outlook for this year is going to continue. It is looking good, and I mean when we're talking about commodity prices, we're talking about grains, supplies back as well back, and you know we're at very tight levels in terms of grains out of the US market. Of course, when we're talking about livestock around the world, then they're all fed on grains. So those two things are becoming more and more intertwined, and it's good for us because you know the less grains that we feed our cattle and our dairy cows in, the better it is for us in terms of our cost structure. So you know I think we're going to continue to see prices. If we see high grain prices, that's going to be good news for beef prices, for dairy prices, all those things.
If you were commodity speculators, where would you be putting your money right now, Jeff?
Gosh, honestly I don't know. It's not one of those things that I follow. I noticed the other day that cotton was at an all-time high.
Yeah,
I mean,
that's
just
been
about
going on
anything
for a
and
while.
everything.
Yeah.
If anything, I'd probably be wanting to short the market. I just think that some of the things like gold and cotton are just, they've gone into the insane. And it may be the traders and speculators, but you're buying at the top of the market, maybe. Maybe there's a bit more upside, I don't know. But
Well, hold on to your pants, gentlemen, because I think the ride's going to continue to be somewhat rocky. Thanks. Coming up after the break, future proof. What our experts will be watching, analyzing, and assessing in the next 7 days. Get inside their brains, find out where they're headed. You just might want to go along for the ride. But first, a question for you in our Farmers Facts and Figures quiz. How much dairying land did German investors buy in the South Island in December? The answer when we come back. Stay with us. Welcome back to Money Talks. Just before the break, we asked you, how much dairying land did German investors buy up in the South Island in December? The answer? They paid more than $100 million for 3,300 hectares of dairying land in the South Island in December. And now it's time for Future Proof. What's coming up in the next 7 days that our experts will be watching? James, how about you? Something about foot and mouth disease, I do believe.
Yeah, well, foot and mouth is broken out in South Korea, and of course that's a pretty important market for us, and particularly for beef. So I think that's going to be one to watch. It has been evolving over the past few months, but I note that the UN are very concerned about the spread of foot and mouth and the effects that it could have right across Asia. Of course, Chinese New Year just happened. A lot of people travelling around Asia, and potentially we could see the spread of it. So they've already culled 3 million animals. That's not an insignificant number. 175,000 cattle. So pretty severe. That's going to be something that we need to watch because we might be able to fill the gap into the US market, who are filling the gap into the Korean market.
Could be good for us, but listen, it's been all those months and they still don't have it under control. It's not looking good.
That's right. I mean, and of course, if people are concerned about the safety of food, then that may just put them off meat products altogether. So I think that's something that we've got to watch quite closely, and it'll be something that I'll be looking out for. Great.
Now let's talk to Jeff. You've been in Australia recently, visiting Melbourne. You had a few thoughts.
Well, just again, the resource sector continues to drive the Australian economy, and what it's doing is it is inflationary, because you get people who might have been doing a factory job or working in a lunch bar. They go and get a heavy-duty, truck driver's license, and pretty much they're on $100,000 a year Australian driving trucks. It's just inflationary. I mean, the median house price in Melbourne now is $603,000. It's the most unaffordable it's ever been. Sydney, I think, is $624,000. And with dollar for dollar against the US, when you compare it to other markets, Australia looks like a bubble when it comes to the housing market. But yeah, unemployment rate's low and the economy is booming. But if I was in the tourism sector, you're not going to get many American tourists going to Australia. It's too expensive.
Yeah.
You may get Asians going there, but you're not going to get many Americans. If you're a manufacturer in Australia, how are you going to manufacture and export it, at a dollar for dollar?
It seems so many countries, us included, have really gone crazy in the property markets, and now everybody seems to be paying the price. Another big property bubble, not just across the ditch, in China.
Yeah, I mean that's and overnight we've seen the Chinese tighten up their interest rates again. That's to try and control inflation. They have been trying to control their property market, and that's a real issue. I mean, we have probably seen a lot more funds going into emerging economies. And the potential is there for some asset bubbles to occur. Of course, if it happened in China, then that have some big effects on us here. They're becoming really, really important to us, like Australia. Chinese economy steaming ahead is good for us.
Okay, best advice, gentlemen, leaving you very quickly for the farmers out there watching. We got a brand new year coming up. What's your top tip of the day, James?
Well, I think things are looking pretty positive. We've got good commodity prices and good revenues coming through, but I think something to watch closely and something to manage closely will be those the cost structures. And fertiliser prices probably going to be high. Feed costs are going to be a bit higher. Fuel prices are going to be higher. Electricity. I mean, there's a whole lot of issues there. And I think even though revenues are going to be good, going to have to watch the cost too.
So even though dairying guys are making huge money, they don't have much to throw around, do they?
Yeah, well, these things go hand in hand, unfortunately. If food prices go up, then everyone around the world wants to produce more food because it provides better returns. They want more fertilisers. So, while we may see some increases, then there's also some negative impacts on farmers too.
Jeff, what about you? Any bits of advice for the guys and gals watching today?
Pretty much, if you're carrying debt, repaying debt's the best investment you can do.
And that's what most farmers, I believe, are doing.
Yep, and that's what a lot of consumers are doing. I mean, you've got market uncertainty in the short term about your job. You're going to stockpile cash and repay debt, get yourself in a nice, strong position, and then maybe later on you're in a position to do something. But it's not the market to be bold in at the moment. But, you can't be timid and sit in the bank. Sorry, James. Can't sit in the bank forever.
He can take it.
You need to be out there making some investment decisions, but cautiously at the moment.
Thank you, gentlemen. We'll see you again. Thanks to my guest, ASB rural economist James Shortall, and senior financial advisor for Spicers, Jeff Matthews. We love to hear your feedback, so drop me a line on the website. We'll give the last word to the fearless and the brave, for they are the ones who will successfully navigate the icy slopes of the world financial crisis, courtesy of a cool head and a careful descent. If I was you, I'd follow this guy. Remember, no matter how daunting your economic challenges, keep the faith. See you next time.